speak to Philip Scott here from Simple Investments. Morning, Philip.
Good morning, James. How are you?
Yeah, good. We've got to talk money, beginning of the week. Lots of questions. I was thinking of you last week. With this new Bank of England governor, how are things going to change?
Well, I think that, what to say, I think we're going to see a more flexible approach to policy under Mark Carney. He's obviously come in from Canada, where he did a very good job at the central bank over there through a very difficult economic situation that we know post-credit crisis over the past few years. So he's drafted in a new team. I think we're going to see, as I say, some more flexibility. I think that.
What do you mean by flexibility, though?
Well, what I mean is that historically the Bank of England has been targeted primarily and almost entirely on keeping inflation at 2%. You look at the central bank in the US, for example, yes, they're keeping an eye on inflation, but they're also keen to make sure unemployment comes down. So I think we're going to see him looking at different economic metrics upon which he can be measured. But ultimately, of course, he'll be looking to build on the slow progress I think UK is now starting to make. We're seeing it in manufacturing and in the service sector. It looks like finally there is a little bit of recovery coming here in the UK, and I think Mark Carney's probably reasonably pleased that he's turned up at this time, and with a bit of luck he'll be remembered for all the right reasons going forward.
The thing is with his job is that if he gets it right, everyone says it's brilliant. If he gets it wrong, he said, well, it's the economy. I can't control it all.
Yeah, no, that's true. But of course, he's a well-remunerated chap with a lot of skills. Historically, a investment banker himself, knows his way around stocks and shares. That is for sure. You're right. I mean, in time, he will obviously be judged in the same way that Mervyn King was judged after his long tenure at the bank. But we'll see. I think it's a refreshing change for the Bank of England, and I think if he wants a new team around him, fine. We have been going through a difficult economic climate, and why not have a slightly new approach to policy? And just to say in addition there, James, and when he announced the interest rate decision last Thursday, of course, his first meeting, interest rate meeting, he broke with tradition and actually put a statement out alongside the interest rate decision, basically saying, don't you guys be thinking interest rates will be going up in the near term, because that is not the case. Now, that is something that we've never seen before. We never got a verbal statement to sit alongside the rate decision. So markets were very, very strong on Thursday. So far, so good. I just hope that the economy, I mean this in the nicest possible way, doesn't continue to recover too quickly, because he will have to start looking at interest rate rises. But he said he won't for a year or two. Let's just see.
Good stuff. Philip Scott there from Simple Investments. It's BBC Surrey.